A warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos. All right, then let's begin with your news now. The Central Bank of Nigeria has removed all limits on cash deposits and increased the weekly cash withdrawal limit to 500,000 naira for individuals and 5 million naira for corporates, up from 100,000 naira. Effective January 1, 2026, the CBN also abolished the monthly special withdrawal authorizations and maintained daily ATM limits at 100,000 naira. Excess withdrawals will attract charges of 3% for individuals and 5% for corporates. The revision aims to streamline cash management, address security concerns, and curb money laundering while promoting electronic payments. Embassies and diplomatic accounts will no longer enjoy exemptions. In Windhoek today, the Bank of Namibia's Monetary Policy Committee announced that it is keeping the key interest rate unchanged at 6.50%, saying the current stance remains appropriate to support price stability and maintain the currency peg. Governor Johannes Gawahab, addressing what will be his final MPC briefing before he steps down on December 31 after 5 years as governor of the bank, said the decision reflects a balance between subdued inflation and the need to safeguard economic stability amid global uncertainty. Let's take some excerpts.
The MPC decided to keep the repo rate unchanged at 6.5%. Let's consider recent economic developments in our country. The domestic economy grew moderately. Inflation has remained well contained, while growth in the private sector slowed since the previous MPC meeting. The merchandise trade deficit narrowed while the stock of international reserves remains sufficient to maintain the currency peg and meet the country's international financial obligations. High-frequency indicators in the domestic economy suggest that while economic activity maintained positive growth, the pace of expansion slowed during the first 10 months of 2025 compared to the same period in 2024.
The World Bank has released its latest international debt report showing developing countries paid out $741 billion more in debt service than they received in new financing between 2022 and 2024, the largest gap in 50 years. In 2024, they restructured $90 billion in debt and secured $80 billion in net bond financing, but at high average interest rates of about 10%. Total external debt reached a record $8.9 trillion, with $415 billion paid in interest alone, diverting funds from health, education, and infrastructure. With bilateral creditors pulling back, many countries turn to domestic borrowing, increasing financial pressures. The report warns of severe social impacts in the most highly indebted countries. Over half the population cannot afford a minimum healthy diet. In Cameroon, the African Development Bank has approved a 25 million euros facility to help Cameroon's CCA Bank expand trade finance for SMEs and other businesses. The funds, approved on December 1 in Abidjan, will be deployed as a transaction guarantee, providing risk cover for CCA Bank's trade finance operations. The facility will support imports of industrial, agro-industrial, and telecoms equipment and allow the bank to offer up to 100% guarantee to confirming banks to back letters of credit and other instruments for SMEs in Cameroon.
Let's switch into the commodities data deck, beginning with energy prices. Oil prices continue to rise today, with Brent crude up 1.09% to $63.13, while US WTI gained 1.26% to $59.38. Natural gas advanced 2.25% to $4.94, and Arabic gasoline climbed 0.98% to $1.84 as out of 12:57 GMT. Finally, two soft prices. Cocoa was marginally lower by 0.05% at $5,452, while coffee slipped 0.09% to $373.10. Cotton rose 0.11%, palm oil increased 0.08%, and sugar gained 0.73% to $15.09 as of 12:59 GMT.
Thank you very much, Grace, for those market updates. And that's it on today's edition of Money Moves. From me and the rest of the team here at the FMDQ studios, we say thank you very much for watching and bye for now.